Hello, guys. Hey, everybody. I'm super happy and super excited to be back here once again. And today, I'm excited because of two reasons. First of all, I'm having Ling as of my guest. And the second one is that we're unleashing the second season of our podcast. But this season is going to be focusing entirely on quant research, quantitative modeling, machine learning, and deep learning for the financial markets. And for that aspect and for that reason, I'm very exciting and very enthusiastic about getting to meet all the people that we're going to be planning to have as a special guest over this season. Without further ado, Ryan, first of all, thank you for coming here and I'm very glad to have you here. To be frank. Um,
Yeah,
so
thanks for the warm welcome. Yeah, nice to
Thank you,
be here,
thank you.
and
Again,
hope
thank
everyone
you for
like
coming here. I really like to getting to know new people
yeah.
over the pod. I think it's a great stage to come and to have like an authentic conversation between two individuals about something that really fascinates them. Aside of that being the main topic of their day-to-day life.
Mhm.
Without further ado, I would love if you can introduce yourself a little bit to the audience, and then we're going to be able to get going.
Sure. Yeah. So, hello everyone. I'm Ryan. I'm currently based in London as like a systematic stir trader. So, if those who do not know about like stir is like short-term interest rate. It's kind of like a backbone of the finance industry, like overnight borrowing. All things are tied into stirs. Before that, I am from like quite big HFT doing crypto stuff, mostly spot futures, things like that. And then yeah, I had a short stint in Singapore as a crypto market maker, and also was started my career in like French banking, doing like structuring and exotic stuff. But that's like my basic intro.
Very good. Um, by the way, I like because of we're speaking with quants and it's slightly different than speaking with traders.
Mhm.
What's your background? What's your educational background?
So I studied in Hong Kong, mathematics and data science. It's like a merge between like statistics and computer science. So got to touch both of them. I guess
It's a
that,
perfect touch base.
yeah, it's a pretty good like starting point to the current quant work I do.
Very good, very good. Without further ado, you have mentioned that you have done various things. You have touched like different specialties and different areas in the
Hmm.
quantitative world. You have mentioned HFT. You have mentioned feature based. You have mentioned what you're doing right now. And I would like to ask, and I would like to start with a very honest question. Why? People likes to move likes to stay static. Like they
Mm,
like to get into their subject and to delve deeper and deeper and deeper as much as they can and like to and to congregate with more people and to expand their knowledge. But you're not
yeah.
that type of person.
So I'd say that instead of like being very deep, um, my primary interest is to understand more about how the whole financial system works and also be able to take a view on it and possibly monetize it. So that's why I keep kind of moving around. I'm not encouraging that, obviously. You have to be quite good at your job. You have to understand the field. But I think most people would have the same belief in the finance industry that we ought to experience different desks, different companies, different firms, and really find our fit, um, be it like the product. You could be very good at fixed income, terrible at equities or more high vol instruments. Um, or you could just thrive in like maybe non-linear stuff like options and things like that. So it's really not about like I really had to hunker down and really understand this product and make myself change. It could be just like the market just doesn't fit you, and after a year or two working there, you want to switch products and switch
Obviously.
firms. That could be it.
Obviously, I think that the possibility to jump in between two different subjects could lead into more significant outcomes as if you
Yeah.
being the product. So you have mentioned market makers, HFTs.
Hmm.
Let's dive deep a little bit more because
Sure.
HFTs and market making is completely different, but you have experienced both.
Hmm.
Let me ask you what's like the hardest role, the hardest takeaway that you're taking out of your experiences being like a quantitative research in an HFT company. And conversely, I would like to know what's your main takeaway that you're taking outside of being a market maker.
Yeah, so my role wasn't really a quant researcher. It's just trader. Like I guess
A
like
trader in the
the
in the HFT
definition there
world.
is basically anyone who can press a button and on CME or like yeah, so researchers are mostly what we call quants. And quants are basically the people who dive deep into models, into mathematical models. They do the pricing. They also have a pretty good understanding of the trading system, although not on the operating level. They're more on like system architecture, how to change specific variables to affect certain change. And traders are more like, um, if you go back to the old days, on a plane, you have like a flight engineer and also like a pilot. So the flight engineer would be more like a quant, right? And traders are more like the pilot themselves. Of course, nowadays most things are like automated, right? And it's also the same thing in the quant industry, where the trader is kind of just sitting there, not doing nothing. We're pretty much just monitoring everything and just trying to see if the algorithm is behaving like what we expect. And that's like a huge part of the job is to figure out if things are going wrong. And if things are, we have to notify like the quants or the devs to try to find out what went wrong. So
That's
yeah,
that's a very critical job. Just to outline like the amount of complexity that it's
yeah.
involved with like such a responsibility, like
Hmm.
monitoring an algorithm like an HFT algorithm. I think it's way more complicated than the way that you're presenting it. I guess that you're incredibly humble, but it's hard. It's a very
Yeah.
hard mission. Being a pilot takes a little like at little 3 years to complete.
Hmm.
So you're like reflecting yourself to a pilot. So let me know how it's like monitoring an algorithm that change faster, way faster than the light speed.
Yeah, so a lot of the times what we do is just to monitor a flow. So it could be retail flow. It could be just flow on an exchange. So how do we define flow? Flow is like some paper trader. So paper would be someone that has real money, like a hedge fund manager, or someone who can move market. For example, in crypto, it could be like Michael Saylor, he buys Bitcoin and obviously he buys through a market maker, he buys through an entity. So if we see some kind of flow like that going through, then perhaps we have to change our algorithm in certain ways. Um, to one, how do we hedge the flow and how do we quote responsibly, like in a reasonable width in the bid-ask spread. So it isn't science. I think it's more art than science because you don't really know what the pain point of the counterparty is. it could be 10 bips, it could be 20 bips. You kind of just have to guess like what's the max pain threshold that they are willing to accept for a certain trade. So, and also on the algorithm themselves, um,
How do you understand the game? Like the game itself, like knowing the pain point of the counterpart, like it is still very complicated. So how do you
yeah,
actually break it down into like minor components, and you're actually monitoring that minor components in order to spot the like the most desirable pain points to catch, and to like monetize your path in order to like co-saying mastering like your little piece that you need to master.
it depends on several factors.
Hmm.
Um, the the best situation would be when the market is disagreeing with each other. So, for example, someone is buying Bitcoin, someone is selling Bitcoin. So basically, that means someone is betting that Bitcoin is going up and someone is betting Bitcoin is going down. And they usually, at these scenario, are willing to pay huge money to cross huge spreads to do it. So as a market maker, you'll be like, oh, nice. Party A is disagreeing with party B. So I'll just quote a very wide bid ask spread and I'll just capture it with little to no risk on my book. Now,
Hmm.
um, the less ideal scenario would be someone who knows something that you don't know. And that would be like adverse selection. So it'll be someone, for example, there's a pretty good scenario. It's like when Iran was attacking Israel, there's a certain fund in Israel who just dumped like several hundred Bitcoins, right? They know something that we don't. We don't have the intel on the ground. So we'd be like, okay, this is something weird going on. This is something out of the ordinary. There shouldn't be that much self flow during this time of day. It's like the Asia session. So usually there's nothing much going on. Somebody is selling Bitcoin. I better quote wider now, like
Hmm.
exactly now, um, and try to hedge faster. Because if I don't, other people will get this flow anyway. Because there are different market makers all competing for flow, right? So we have to react fast and then we have to react appropriately. And there are certain things in the system that we have to grab instantly to try to stop the bleed or even overhedge it to monetize the move. So I'd say like it's very fast algorithm, but at the end of the day, it's still humans making decisions, right? So
Absolutely.
there's a certain latency that we can exploit on the human side, and we have to be extremely precise and quick.
How do you like obviously that there's like human beings on
Yeah.
the dead end of like of the structure of how the algorithms are is actually working. But my question is like you have a data science background, and
Hmm.
you obviously work with machine learning and deep learning with your work, and I would
Hmm.
like to understand like with you how like utilizing those types of algorithms makes your decision by the end of the day easier or a lot softer or a lot concrete, so you'll be able to derive the right conclusion in order to make the rightest move, I think.
Mm. Yeah, I'd say not at the point of like such moves are derived, but more on like a post-mortem kind of thing. So after the move, after everything, the dust has settled, we'll use some kind of data analysis, machine learning, whatever,
Obviously.
to try to understand what really happened. What is the first mover? Um, how do we like capture this kind of stuff quicker?
Hmm.
So a lot of times, like um, in like interest rate markets, there's like the roll period where big hedge fund macro funds they decide to roll their portfolio like from, for example, debt contract to the March contract, and this is like a huge move usually because everyone is doing it. Everyone has to roll their portfolio, and this is kind of systematic. move that people should capture. And then there are certain patterns in the execution that we can exploit, things like that. It doesn't necessarily have to be like super complicated machine learning. It could be like a very
Honestly,
simple algorithm that just kind of screens all
it's a
the flow
linear
that goes through
algorithm by the
CME.
end of the day.
Yeah,
It's a linear algorithm because
yeah,
like
totally.
it's a human decision
Yeah.
being the data.
And like their execution methods are like very naive, which is like everyone can see that if they decide to look into it. And we just have to be a little bit smarter than most market makers, just a tiny bit, and then we can get most of the flow. And that's really the game.
In terms of like obviously you're influencing by the end of the day your company overall performance. Obviously, we're not going to be mentioning any
Mhm,
names here, but you're the one who actually has like the most influential aspect, or not the most, but one of the core aspects that actually drives the plane as you have posed previously.
mhm,
So my question is, how do you know to like how do you structure or outline the competition in between market makers in that particular financial instrument, and how do you know address how do you know how to address it properly when you're actually making the decision, or if it has no relation, let me know. But if it has relation, I would like to know how the competition actually impacts you and how you influence the competition.
Yeah, that's a very nuanced question. I'd say it's a
Yeah,
bit easier to say in the interest rate market because there are only a few
in
participants
the
that we
interest
know
rate
in it.
brackets.
Yeah, in the interest rate futures market, there's only like a few known big competitions that really matter. In the crypto market, however, it's like the Wild West. Um, there's so many crypto market makers out there that you don't even know the names of,
Yeah,
and they are
I know
actually
their names
doing
in person,
yeah, yeah,
and you necessarily not knowing their names.
yeah, and they're some of them are doing big size, and you don't even ever know about them. So crypto market makers are like a rare breed that actually gets it's very Pareto distribution, I would say. So like some market makers could get like 80% of the flow. Like for example, Jane, they are very good at their like algorithms and their market making and stuff, right? So how does that drive? I think spreads has tightened a lot since 2023. And that means that market makers can't really just survive on raw flow itself. They have to start taking positions, and having proprietary decisions on flows and how to monetize them better. Because back in like maybe like 2020 or like 2022, spreads could be like 1%, 2%. FTX was the main driver that tightened the spreads. They went
Mhm.
bust, but still the market won't suddenly widen because of their collapse, right? People like macro hedge funds or like crypto funds are already used to like spreads at around 10 bips or so. So that's like a 10x like decrease in the revenues that we can extract, right? So, and like some kind of funds, when they come in and they trade, they could be trading very adverse flow. They expect you to accept the flow, and then you have to just figure out a way to still keep the relationship with them because sometimes their flow could be wrong. They could have predicted the wrong way, and those could be like huge um P&L driven from that. But sometimes the flow are just so adverse that you'd be like, okay, um, just got filled on like 100 Bitcoin. Yeah, we're kind of screwed today. And that's the game. You just have to accept that. And a huge part of the job is really to fix stuff. And it's really hard to know when you have made a mistake or not. It's only when after the day, when you inspect everything, you do your analysis, and you have to do your post-mortem, that you find out, okay, I screwed up here. And you have to tell everyone that. And that's like sometimes that's not very comfortable as a trader because everyone has their ego, right? And it's also not comfortable to tell everyone that you screwed up here and here and here. And some of them could be like preventable mistakes. So a huge part of the job is really to minimize mistake, learn from mistake, and just be humble, I would say.
Hmm. Look, let's 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 try to delve even deeper. All right.
Yeah.
Um, Market making, by definition, it's not a very counterintuitive subject where when you're like thinking over like within your first thought, and making markets from being illiquid to liquid
Hmm.
makes you, on the other hand, like as a market maker, a domain expert in like various types or like a very specific type of financial instrument. Now, to be
Hmm.
frank with you, how like the entire landscape of how a market maker should be operating supposed to look like in terms of the economic understanding is like the participants of the market,
Hmm.
the larger and the smaller participants. How much
Hmm.
trading volume will it involve? How to monetize it? How to organize the book in a very ordinary manner? How to utilize the request across different participants is gonna be well spreaded, and how it actually structured. Like if you were like a CEO of a market making company, and
Hmm.
you're catch like the I don't know, a very well known asset, which is incredibly competitive and incredibly um, and like the participants of that particular asset is very large, and they capture a lot of
Hmm.
market share uh,
Yeah.
trading daily. How would you manage that?
Yeah. So let's first talk about market making, like what it is, what a participant. So market making is like if someone wants to buy something or someone wants to sell something, there's not necessarily liquidity at the time in the market, right? So there needs to be someone like a market maker to be there, providing liquidity all the time. No, technically, like for Bitcoin, that will be like 24/7, right? For interest rate markets would be whenever a CME opens or close. Um, so the participants mainly are market makers. There'll be like hedgers, so like people who have like specific interests. It could be banks, working for the clients that needs to hedge the exposure. It could also be like speculators, so like global hedge funds who wants to take a position. So it's basically only these three participants in every single financial market. And in terms of like how to tighten the spread, how to develop a market, that's really um just it's a very hard question because we don't really know when a market will develop, and there's no way a market maker can push this thing to happen.
That's the point.
The market has to have significant interest on both sides, buying and selling, for like a market to really tighten, for the volume to really grow. The market maker can help by making the spreads less costly for each participant and to pseudo encourage this kind of behavior. But they can't really do anything if no one wants to buy and sell the asset.
Mhm.
You're not going to buy Bitcoin and sell Bitcoin because the spreads are thin. You might buy it, you might buy more of them because it's cheaper to cross the spread, but it originates from your willingness to buy it.
Mhm.
So if you're running a market making company, per example, um, you really have to develop relationship with like people who have real money, like hedge fund managers, um, Like,
I would like to do a little bit of the
yeah,
conversation about the market making. In order
yeah,
to touch a point that I would like to clarify, you would need to develop relationship with hedge fund and large whales.
yeah. Or money.
Like
Yeah.
let's yeah, or money. Let's try to break it down a little bit more in order to understand what your actual intentions are.
Yeah. So, a huge part of market making is not traded electronically. It's traded through voice trading. So that's when the big blocks of trades actually move through the market. So it's in the old days, it would be like a squawk box where people just press the button and yo, can we get like 500 Bitcoin
It's still
off a
happening.
bit,
It's still
right?
happening, by the way.
So
Very
now,
large heads
yeah,
are.
in the FX markets, I think it's pretty still like
Yeah,
the
the
old
FX
terms, right?
FX is like they're the ODCs. They will
Yeah,
ever they will ever remain the same, I think, as long as banks
yeah,
are still very let's stop it
yeah,
here. All right. All
yeah,
right, let's stop it
Hmm.
here.
Yeah.
Yeah, I'm with you. I'm
And
with you.
so for crypto, that will be on, for example, platform like Telegram or Bloomberg Chat. It still goes through like these mediums where people manually negotiate a buy and sell price. So, uh, in order for a market maker to really work, they will need to have these big blocks of flows because one, you get more information about the market, and that I think is the most important point, is you know what the main market movers are trying to do at this point in time. And second is they're rich, so they can cross like really wide spreads.
Hmm.
When they're trading in like tens of millions, they don't really care about like maybe like a 30, 50K spread cost that they paid to. So, and having like multiple of these counterparties, well, we say counterparties, it's really just like a client relationship, to be
Participants.
honest. Yeah. But you get to know, have a more better feel on the market on what's really going on. So you can monitor some statistics like buy sell ratio, right? So what's the percentage of buying and selling from the counterparties today at this time, or like maybe a certain time frame? And that's very good information on where the market is trending. Because most likely, if you buy is more than sell, the market is going up. Of course, it
Yeah.
doesn't consider your own hedging, right? So that's why a lot of these kind of what we call OTC trading is still valuable. And it takes a lot of work to really maintain it because,
Do you
yeah,
really think that OTC trading is very valuable, although it's being very old-fashioned because of what you've just explained? Do you think it's still efficient that way?
um, depends on what perspective you're taking, right?
Yeah,
If
obviously
you're
it
taking a
depends on the
perspective
perspective
of
that you're
like
looking
a
at.
normal market participant, right? Obviously, if I'm like a small hedge fund with no outside connections, I would prefer everything to be noted on the exchange plotter, right? I don't want hidden trades. I don't want to
Mhm.
see sudden spikes in the move. As a market maker, you'll say, of course I want OTC liquidity because I get more information like compared to everyone else.
Mhm.
And for like the OTC manager, like the counterparty on the other side, the hedge fund guys, of course they want it. They want to hide their own trades, right? They don't want to announce it to everyone. And they also get like better spreads um, compared to naively executing to the market, which if they execute themselves, their algorithm is probably not that good because they don't really care, right? Everyone will pick up and their flow and they will just jack up the prices, right? If they want to buy. So in in essence, I would say money wins, and that's why OTC liquidity will still remains like for the foreseeable future.
Because it's interesting how the market actually works, like from your perspective, because you're actually mentioning a very increasing an exponential direction towards like a very unique perspective, but you still need the liquidity from the OTCs market
Yeah.
in order to actually make sure that you're substantially growing and increasing your exposure in the market and your
Mhm.
connection and your connectivity with your counterparties, which is
Mhm.
which is a very complex landscape. If I'll take a step back and I'll like think strategically, um, from me being like in the point of view of an entrepreneur, I would stop and I would think of, okay, how can I get my landscape or my counterparty list bigger? So I would need
Mhm.
like more liquidity from OTCs, or will I need to intervene with what I do more more like other type of counterparties in order to like bring a very great reflection to what do I do right now
Yeah.
with my hedge fund or market
Mhm.
making company.
Yeah, definitely. And I think um having a growing list of like counterparties that you can rely on is very important in the market making world. And that's why it's like it's not just, quant sitting in their bedroom, underground doing the
Obviously.
work. It's also about like maintaining relationships. It's all about, entertaining, the counterparty, you know, being
What type
polite,
of
and
entertainment
quick
do
at
you
like,
offer? Will you invite them to a Coldplay concert? You have
honestly,
mentioned
don't know.
entertainment. I would love to receive an invitation to a Coldplay concert, by the way. Just for you to note. If you like me as your counterparty, I would love to receive that for Christmas. All right.
Yeah. I think they do have like AUM like requirements, but we'll scratch that. Yeah. It's all
You
right.
have
Yeah.
requirements. No chance.
Yeah. Yeah. No worries. Yeah. I mean, a lot of times we also have like relationship managers working in the back end to smooth out, the conversations. Because our main job is just to quote like bids and offers, right? Um, we're really not expected to have any more conversations, chatting them about Christmas, taking them out on the New Year's like fireworks things. Those are like for relationship managers to do. They have to maintain the relationship with their clients and have like updates on like service offerings. For example, if suddenly we are offering like options as an instrument, that's for the relationship manager to update and tell them. Maybe like some legal works, things like ISDA or like MSA that they need to sign. Those are not our jobs. Those are for relationship managers to do. And also regulations and stuff. Yeah, not our job. But we have to understand, like, for example, some clients, some counterparties cannot trade certain products. And they ask us, sometimes as a mistake, we'll just quote them because God knows, we don't know. Um, and then the relationship manager has to come out and stop the trade before it happens. So they do a pretty like significant roles too. Um, but yeah, that's more on their side, which I don't really have a very good understanding of.
Yeah, obviously. Look, I would like to take the conversation on to like very much more interesting part, like as an individual
Mhm,
being in the market maker world. Hypothetically, right now you're taking yourself and you're starting your own journey
mhm,
as a small hedge fund manager. What would you
mhm.
derive from your past experience and like actual present experiences? Um, like what are the core components, the core considerations? What will be the main rule of thumbs that you're going to be extracting out in order to build a very strong fundamentals for your small hedge funds that you're willing to establish?
So it will be really hard for me to start a hedge fund for starters. Because I would say the main difference of hedge fund and like a market making HFD is the strength of the directional taking. As a market making trader, I would know roughly where the market is going for the next minute or so. But the hedge fund guys, they're predicting a year later, maybe. So our drawdown could be like, I don't know, like 50K, 100K. Their drawdown could be like 30 million. So it's a total different game. The pain tolerance is a lot higher than ours. Um, and also the game is just different. They're predicting the future at a very longer like time frame. I guess if I'm gonna be like a hedge fund manager or something like that, it'll
Or
be
systematic
yeah,
trader or a manager of a
it'll
systematic trading
still focus
company.
on like market making. Maybe something on the mid frequency side. So mid frequency could be like 10 minutes to a day or so, like
Hmm.
kind of position taking. It'll be focusing on like impeccable execution strategies. So we have to randomize patterns. We have to um try not to pay like taker fees, be passive, but also predict trends, like very short-term trends, like from milliseconds to like a minute or so. We have to identify those trends and be able to extrapolate like alpha from it. Um, I think the main advantage of like market makers compared to like hedge funds is the capital usage. We can have like as little as like $2 million and start a market making fund because
Hmm.
we are delta neutral for most part. Um, as a macro fund, you need at least like 100 million to be something, and to really trade,
Obviously,
you need
well,
at least
it's a
like half a
completely
yard,
different game.
right?
It's a completely
Yeah.
different skill. I understand, but my question is like, although knowing those considerations, like
Hmm.
the you will take like as a very hypothetical starting point. I would ask you like, what will be your main considerations out of your past experiences? Um, like trying to craft not just a hedge fund, but a systematic trading company. What would you
Hmm.
do? How would you reflect to what you have to what you have absorbed over the years, and how would you embrace them right now? And like what's the type of the engineering that you're going to be doing, or reverse engineering that you're going to be doing in order to extrapolate the rightest pattern or the rightest workflow for Ryan Ling or for your company name, for example, Ryan Ling Inc. or da 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 da,
Hmm.
right?
Yeah. I say like if I'm gonna be a hedge fund manager or so, I would be like
I
the
gave you a
worst.
compliment. I told you that you're going to be Ryan Ling Inc. So
Yeah, okay. If I'm gonna be running Inc., the owner of it, um, I would be like the worst counterparty that a market maker would face, right? Because I
mhm.
understand their game. Um, and I wouldn't say that I would try to rip them off, but I would like demand very, very tight spreads whenever I execute because I know people lose money um whenever they try to execute through OTC counterparties. And also whenever they quote, usually they have a skew, right? So you can kind of know um what market makers are trying to do. So let's say Bitcoin is at like 100 midpoint, right? And the quote that they gave is 99 at like 105.
Mhm.
Why are they backing it out the offer? I mean, there's usually something going on in their book, right?
Obviously.
There's some kind of skew. And you can kind of get that information and try to use it because essentially you're viewing almost exactly what every other participant through that market maker is viewing.
Mhm.
So that usually means some kind of people are doing huge volumes at a time that made their quote skewed. So that's some kind of aggregated like information that you can extract from them. So,
Mhm.
well, like market makers are trying to game hedge funds. Hedge funds can also try to counter game them by, asking them for like quote informations. That could be a game that we try to play.
Mhm.
Yeah.
I got you. So, that's a very interesting point that you're actually mentioning here, because making sure that you understand the relationship in between the two parties
Hmm.
actually enables you to find your sweet spot to establish like a fund or doing something by just
Yeah.
understanding the language in between the two parties. Um, Now, obviously, in a very utopic world, that could be a potential. But how? Let's just understand how the things works better. If you would actually like to start something like that right now, how would
Mhm.
you understand their language? How would you translate their language in order for actionable signals that you can actually execute in order to understand or in order to act in the market and to participate with that triangle of relationship or conversation.
Oh, I don't really have experience on that one. I'd say that the best I could do is to go into a market that's new and try to just punt directions. Because
Mhm.
on most market nowadays, it's
It's
way too
literally
developed.
impossible.
Yeah, it's
Literally
really hard
impossible.
to
It's
really
impossible. It's not
extract.
literally, it's impossible.
Yeah.
Yeah.
So I think there are new markets out there right now. Um, Crypto is kind of like old already. And there
Hmm.
are some emerging markets like, for example, AI compute, right?
Yeah.
So it's a very interesting topic because I just literally just discovered this like weeks ago. People are starting to commoditize compute power and build futures on it. So
Hmm.
there'll be like, for example, a big AI
That's a very
company.
interesting one. That's a very interesting one. I would like to stop you because
Yeah,
I'm not really familiar with that topic. Um, People commoditize AI compute and they build
yeah,
future contracts over the compute that they offer
delivery. Yeah,
to each other.
yeah.
What's the business idea behind it? Like,
I would
what's the
say,
company?
yeah, it's a really interesting idea because, like electricity, like oil, like AI is starting to become like a backbone of every industry, right? Every company kind of uses AI anyway. So it's kind of like electricity. So you use it on demand. So like electricity, um, you should be able to trade the prices, right? You should be able to hedge future exposure to like energy like shortages or whatever. So like reasonably, there should be a market, a tradable market, a futures market, an options market, things that develop around it to deliver GPU compute to end users, and hedge funds or market makers should be on that platform to try to make that happen. And that's kind of like the new crypto, except now it has actual economic like properties,
That's exactly what
right?
drives crypto.
Yeah. And yeah, I would say like right now there are like few exchanges like ORNN. They're trying to build this kind of thing. Also there's something called like Compute Exchange that was also trying to build something like that.
A
This
company named Compute Exchange, and they're trying to establish a developing market to trade and make a
Yeah,
tradable market for AI compute.
yeah, exactly.
That's a very interesting phenomenon. You know, that's not funny. That's like the next game.
Yes, that's literally the next
That's the
gold rush that I'd
next
say
developing
like
era.
yeah. And something like right now, which is kind of like the end of the developing spectrum would be like prediction markets, right? Like Kalshi. and poly market. So these are like markets that are kind of developing, but in these markets, it's really hard to put the normal like market making game where you develop like counterparties and things like that, right? Because anyone can literally just go on to poly market. And if they have a view, they will take it. And it's very prone to insider trading. So I wouldn't say that this is a very good market to really expand on, but compute is it's a growing market, which I say like in maybe 5 to 10 years, it's going to be like in trillions, right? It's going to be even bigger than crypto because everyone is going to use it.
Well, you're going to be, look, let's start with a very question, very desirable question to ask. How do you
Yeah.
price an AI compute unit? Like with a
Okay.
unit, how do you price? Like how do you actually structure like
Yeah. You would really
the
have
compute
to
amount that
decompose it, right? So like
decompose it?
what's really the cost of like an AI compute? So it'll be like something like electricity, it'll be like
Hmm.
GPU cost, it'll be like the demand surge cost. So for example, in certain periods, maybe some type of GPU is going to have more demand than others. There's also be going to be like futures premium. Um, there's going to be efficiency on the model to process certain tasks. So um, this is like more of a quant job, to be honest. But eventually we'll be able to agree on some kind of formula um, to build it. Similar to like rent, electricity, like all the kinds of commodities that we have right now, eventually everyone will settle as part of the price discovery like mechanism that maybe no one knows what the true formula is, but the market will settle on a price that makes sense.
Hmm.
So that's just the game.
It's a very interesting topic. Here in Israel, like the amount of new startup and new innovation is like
Mhm.
it's
Yeah.
constantly increasing. And I met last week someone who actually started a company like that's a very familiar landscape, but
Hmm.
trading electricity. And he told me that what we're actually speaking about right now is gonna be the next step. And the major challenge that they experience nowadays is to find counterparties and to find
Hmm.
someone who's willing or being enough ready enough to participate in the game. And it's a very that's the main struggle. Like to keep it short, and concrete. That's their main struggle,
Hmm.
and they try to develop something that will enable people to jump over and to actually participate in this market in order to make it a little bit more liquid. And that's a very interesting point because making something like as a market more intriguing to trade and to participate with instead of like the ordinary and the old-fashioned markets. I think it's a very hard problem. Now I would like to understand your perspective out of it, like
Yeah.
what will make people like in a very rational standpoint to participate in that particular market because of like outside of being like a very new market. And like obviously spreads are high and
Hmm.
slippage is very high, very liquid market. All of
Hmm.
those facts and all the considerations that you're going to be taking by understanding like the minor effects of a new market. How
Yeah.
would you persuade people to jump over?
You um I'd say that it's very easy to um how do I say this? So for a liquid market to turn into a liquid market, there needs to be a market that is already liquid and is in high correlation with the illiquid market.
Hmm.
So, like years ago for Bitcoin, it'll be like Bitcoin is basically tracking the prices of Nasdaq. So people would do like basis trades between Nasdaq and Bitcoin. And the yields are like crazy because Bitcoin prices would like just go out of line so much that people can just short Bitcoin and then buy Nasdaq, and then they'll do a basis trade between them. So they would cross like maybe 3 to 5% spread and don't even bat an eye because they know the trade is there. Like there's a established like statistical relationship there. And so let's talk about like maybe like AI compute, like how do we trade this? It'll be something like CoreWeave, like, right? So like the company is basically just selling compute, right? So if their business, the stock price is already compute, and then you're trading compute, the basis trade establishes, right? So you're using the liquidity in like the stock market to bring inject liquidity into less liquid market like compute. And that's how we bring about like liquidity into like a market. That can be a way, or you can do like much simpler way would be having like a futures like market. A futures market doesn't require much capital, so people can just use very little margin and be able to speculate on the price. The problem with this is that you have to have a mechanism to pull the futures back into the spot price. So you have to have something like a EFP mechanism, like exchange for physical is a term for like maybe CME, where you just sell the futures to a counterparty and the counterparty will deliver the spot instrument to you. So for example, you sell the AI compute and the counterparty will actually deliver physical like AI compute to you. So these different types of mechanism needs to exist for a functional market to exist, to be established. So I guess these are like the ways that I currently know of. There might be other ways that in the background that I don't really know. Maybe legalization could be a way, like because a lot of like people,
Really? Do you
especially
think?
like US funds, hesitated to get into the crypto market because it's not legalized. That was a huge barrier, like pre the Trump era. So, and during the Trump era, like everything blossomed because everything is getting legalized. So people can actually like put money on
Thanks.
it.
Make America
And
great
also
again.
like, yeah, and also like ETFs. ETFs are a godsend to crypto, right? Because
Hmm.
a huge amount of people can just hold crypto in BlackRock or in somewhere else without worrying about the keys getting stolen by hackers because no one's going to mess with BlackRock, right? So,
That's a godsend gift, as you said, as you
yeah,
have mentioned.
so using ETF wrapper on AI token, sorry, on AI like compute, that could be a way to make it more tradable and more liquid. So there are many ways to do it, and I say the main thing is just not having to touch the product themselves because the products themselves are weird. You don't really want to trade oil and have like a bucket of a barrel of like oil or Brent oil at home, right? You just want
Obviously.
to in some kind of like warehouse, tightly stored, is well kept. So I say for a financial instrument to be liquid, you have to just have the pure speculating power of the instrument when you're trading it. So that's, I think, the main way to go about it.
All right. Um, you know what? Just a quick question before we go. All
Yeah.
right. Um, After speaking about market making and you viewing algorithms and what makes you like
Mhm.
how to make the art of viewing high speed very high speed algorithms articulate, and by the way I think that the way that you have mentioned and put it things in a very ordinary way was incredibly
Yeah.
successful. um
Mhm.
but a quick question before you go. Where do you see the world of market making and in you being an HFT algorithm keeper or viewer or monetizer
Mhm.
will be like in the next in coming years? because it's a very complicated point because AI will I think will impact the markets in various manners and which you cannot predict. I would ask you, out of your perspective and out of your standpoint, what do you think that AI will, or what do you think that AI will actually shrink the post?
I would say that the finance industry has a very notorious reputation of being sticky. Um, right now,
Unfortunately.
we're seeing bond traders are still having their old ways of doing things. FX traders are still using this quant box. It's kind of like a traditional thing where bad or outdated habits just get passed on to new generations. So I don't really expect AI to really change the game of the market making. It might change the way that we interact with our algorithms. So we might have embedded AI, locating different patterns that we don't know and then telling us and prompting us to make a decision. That could be it. But the game of market making, which is to quote bid-ask spreads and be better than your competition, that is probably never going to change.
Mhm.
Um, the
Very interesting
the
topic,
yeah.
that's a very interesting opinion. Because like I think that the congruence between like you being interacting with an AI with an AI
Hmm.
algorithm, like obviously you have mentioned here a deep learning algorithm where we're supposed to like capture the pattern of what actually supposed to be like your job or your role
Hmm.
to interact with the
Yeah.
algorithm or something and to prompt you what to do and then you're going to be the decision maker.
Yeah.
I think it's a very innovative approach, but still,
Hmm.
you know what? I'm with you. I think that the ordinary and the old-fashioned people will not change in the
Yeah.
recent upcoming years, but they will have to make uh, little adjustments in the future.
Hmm.
So, Ryan, to be frank with you, I have enjoyed the conversation a lot with you.
Yeah.
I think that
Same.
that I've been able to absorb knowledge, and obviously you're very fluent and very knowledgeable
Thank you.
about that particular subject. And it was a pleasure to speak with someone like you that really
Yeah.
masters
Thank
and
you.
really uh, 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 gets gets fascinated like speaking about it and
Hmm.
it's obviously it's tangible the amount of likelihood that me and you have to the same topic. So
Yeah. Thank
it's
you very much for
it's a very
inviting me.
warming conversation with you. So thank you and I was glad to have you here in our show, the Blushing Quants. Thank you.
All right. Thank you.
All right. Bye bye.
Bye bye.